today we saw even the DIs have started to add in these positions. Up till now, DIs were booking profits, and you got it right earlier in May. In fact, you made a point that it's the liquidity which will take Indian markets higher. How is the case looking right now? How much of this massive liquidity flow sustainable in your view?
Well, I think when we let's look at where we started from. We started in March, February around 6,700 odd, and today we are roughly around 26-27%, which is a fair significant amount of move. So the question is that the first question is, can it last? I would say yes. Now, can it last without any correction? Probably no. So I think there are several elements to this. So when we say that is liquidity the main driver, I think there is no two questions about it. It is the main driver. Having said that, I think there are several other drivers. And if I have to put it in a very short sentence, if you think can it last, I would say we are getting ready for a multi-year bull market, which could last maybe 2-3 years. And I think that of course that takes into the consideration that there will be corrections from time to time. But I think India is a really sweet spot, and we are just getting ready for that.
Right. The emerging market pack is, as an entirety is witnessing some very good, strong inflows. If you were to compare it to what you're seeing happening right now in the developed part of the world, would you go to the extent of saying that you're actually not only seeing a strong allocation towards EMs, but perhaps the trade is also tilted favorably towards emerging markets right now?
What you're saying is allocation could be part of the story, but I think it's just part of the story. I think there are several other elements to it. One, of course, would be the enormous amount of liquidity sloshing in the global markets. For example, central banks are buying currently roughly around $200 billion of bonds every month, which is more than what they were buying even at the height of the credit crisis of 2009. Then there is obviously a huge move in terms of getting yield. The world today, the amount of bonds which are yielding negative is now increasing every day. We've roughly got something around almost, I think, $12 trillion of bonds now which are yielding to negative territory. What that means is that if you are, for example, a long-term investor, for example, like an insurance company or something, which is looking to match its long-term liabilities with putting on assets of equal maturity, the kind of opportunities which you will get in the developed markets is gradually diminishing. You're simply not going to get that return that you require, so income will diminish. So I think from that perspective, there is both a shift towards getting more yield, and which is why you're seeing a lot of movements in the bond side. Also, so that's a bit more in terms of the quantity of money which is sloshing around, plus the negative yield. And then you're also looking at growth differential. Now, on the growth side, I would say there is not much doubt that emerging markets fundamentals have improved a little more relative to the developed markets in the last few months or last 6 months, I would say. There are some fundamentals to it. And also there are growth differentials to be looked at. Whether the growth differentials are adequate and whether it's enough to sustain a very long-term rally, that remains to be seen.
Okay, let's talk about what you're making of Indian market valuations right now. Do you believe that there's scope to actually expand from where we are right now, or do you also suspect that we're going to see a little bit of correction going ahead?
I think there are several elements in this question. So first of all, let's see when we're talking about valuation. There are various ways of valuation. Look at the price equity, price earnings, or you can look at price books and so on and so forth. Now, my take on this one is that given the amount of liquidity which is going around the market, given the dearth of investment opportunities, given the kind of environment India is in. One way to look at it is, if you're talking about India specifically, would be to isolate India from whatever is happening around the globe. No doubt a lot of the stuff which is happening on the globe is negative, and that is well understood. But if you isolate India, which may not be realistic, but it's a good way of looking at it, because that gives you a lot of clarity and focus. I think that would tell you that India is in a particularly sweet spot. So from that perspective, I don't think it's impossible, or I think it's more like probable that the valuation may continue to be stretched and the market will continue to go high.
Gopal, the reform drive of the government is likely to get much more speedier. That's the indication coming in from Prime Minister. Even in his Independence Day speech, he spoke more about focus on execution now compared to just announcement of big, reforms. Also, how are you analyzing the work done so far as an element which has actually aided the rally so far?
If you go to assess this government performance, you got to look at where it started from, and you got to look at what were the external circumstances. Now, if you look at the external circumstances, it's not been particularly good. We've had internally also we've had a couple of droughts, and then we have a starting point which was not very good. Now, taking all that into consideration, I think this government has done a pretty decent job, and I am very confident that it will continue to get better from here onwards. Now, to answer the second part of your question in terms of whether reforms will get faster and so on, I think the time is probably the government has reached a halfway mark. So I think the time now is it's important that it focuses on some of the flagship schemes. Make sure the penetration of these schemes into, especially the social sector schemes, really goes deep into the Indian society. So I think that's one part. One is that you need to probably consolidate a bit and then ensure the implementation and penetration of stuff rather than looking at bigger or newer elements. The second part is I think some of the stuff which is already done tends to be underappreciated or underestimated. For example, the very fact that millions of new bank accounts have been opened, I think that's a very, very significant step and will have a multiplier effect in the many years to come. The other part which I like about this is that normally this government is doing stuff which is not which may not benefited from the 5-year election cycle. Some of the stuff is looking at it will have really long-term impact, and that's really good because some of the problems India has will not be resolved in 3-4 years, will probably take 5-10 years. And I think this administration is trying to look at some of those problems, and so I think that's really, really important.
Right. Gopal, let's talk about the other area of the market which has really failed to really add to the sentiment, which is the earnings. Surely some people say that the rate at which the downgrades are pouring in may decelerate, but overall earnings estimates being upgraded is still things which are far off. How are you looking at all of that and the earnings momentum? Do you think 2-3 quarters we may start seeing some improvement?
Yeah, I think I agree with you. I mean, the earnings revival is not as yet very firm. I think the main issue there is I would say lack of capacity utilization, not as one would have thought. I mean, the reason corporates tend to invest is when they see demand, and they are not seeing enough demand, they are not seeing the capacity to utilize, and I think it's not really, while of course there's clearly a story where corporates are deleveraging and were probably over leveraged earlier, so that is happening, but I think it's more a question where corporates start seeing more capacity utilization, and that will happen. So for me, I would say this is early days yet. The earning story will happen. Maybe it will happen with a lag, but I think we are very positive that will happen.
So what's the picture that you would sort of paint for Indian stocks in the current environment over the next 2 to 3 years? Would you say that, we have it in us to give a return of something like 30 to 50%? Is that possible?
Well, I mean, if you look at an average return of 15%, what a standard equity mutual funds gives you, and if you assume that earnings will be around the 10 to 15% level, and you multiply that by 3 years, if you're saying 3 years, well, then 45% is what you're looking at.
Okay, and last question, Mr. Bhattacharya, since you yourself are from a big, MNC bank, can't help but ask about the banking sector. Off-let, that's really the pocket of the market that seems to be lending a whole lot of support, doing all the heavy lifting. Would you go to the extent of saying that perhaps the worst is over for that area of the market?
There may be some more difficult times, but I think the intention is very clear. The path is very clear, and it is happening. It may take maybe, I mean, one should not be too jumpy on this. The fact is that these are strong institutions. There is a difficult process to go through. The government is solidly behind it. The central bank is solidly behind it. So I don't think there should be any apprehension about it. So yeah, I'm very confident that this will get done. Maybe it will take a little more time than many people are kind of thinking about. but it should get done, and yeah, we are very confident that this will get done.
All right, Mr. Bhattacharya, we'll leave it at that. Thank you so much for taking time out and joining in right here on Smart Markets from our studios. Thank you. Really appreciate it.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.